Hello and welcome to Trust Issues. On the show today is Duncan Ball, CEO of BBGI Global Infrastructure. Today we're going to be chatting about the outlook for the infrastructure sector in general, as well as BBGI itself. Duncan, thanks for joining me today.
Thanks very much, David.
Now, can we just start at the beginning? Could you give us a kind of a sense of what BBGI's investment strategy is?
Yeah, so BBGI is an investor in social infrastructure assets. We have 56 assets around the world. These are schools, hospitals, modern correctional facilities, fire stations, police stations, et cetera, roadways. And our investment strategy is really focused on four key pillars. One is we focus on the low risk assets. We are internally managed. We have a globally diversified portfolio, and we have a strong approach towards sustainability. In terms of low risk, these are all availability style assets. So that means if the asset is available, if the school, if the hospital is available, we get paid by government counterparties. We're paid by secure public sector counterparties that have well-established track records and high investment grade ratings. And that generates stable, predictable, high-quality cash flows, which are inflation-linked. The second aspect of our strategy is the internally managed aspect. We are unique in that we're the only infrastructure investment company that's internally managed. That means there's no external fund manager. And we think that's different for a number of reasons. One is we're very much focused on making the portfolio better. We like to make it bigger, but a better portfolio rather than just being out there gathering assets. We're not remunerated on assets under management. We're remunerated on the same things that investors are interested in, which is NAV growth and dividend growth. And so we're very much aligned. The globally diversified portfolio means that we have a well-constructed portfolio. We're in 7 different countries, all high investment grade countries with well-developed operating environments, and there's no excessive exposure to any one market. We're in Australia, Canada, the US, UK, Germany, Netherlands, and Norway. So all very, very predictable countries. And then finally, we have a strong approach to ESG. So that means sustainability is fully integrated into our business model. We've done robust, comprehensive climate resilience across our portfolio, and we're comfortable that we won't have any stranded assets due to climate change. We deliver positive social impact. We're an Article 8 SFDR fund. That's also helped us a lot with our clients. It's also helped us with our staff. We feel good about what we do, and I think hopefully our investors that are looking for stable, predictable returns will feel good that they're earning those returns by investing in core social infrastructure that's the fabric of the communities that they serve.
Sure. And you touched on a couple of things in that previous answer, but there are quite a few things that kind of make BBGI unique compared to its sector peers. I wonder whether you could kind of outline them and go into a little bit more detail.
Yeah, I think one is, as I already mentioned, is the internal management structure. I think that is a different governance model. It means we're very much aligned with our investors. We want to deliver portfolio performance. We're not just about making it bigger. We're making it about making the portfolio better. All of our supervisory board members, all of our management board members are shareholders, and 87% of our employees are shareholders. So we very much think and act like owners, and that has been proven over the 13 years since we IPO'd, the consistency of performance when you have skin in the game and you behave differently. And I think that's a differentiator. It also results in the lowest ongoing charge in the sector at 90 basis points. So that's a competitive advantage. And I think it's really manifests itself in a disciplined capital approach, capital allocation. We've not been caught out when we didn't have a lot of drawings on our RCF when rates backed up. So we've been able to manage our affairs very conservatively and been able to deliver on our promises to investors. And we've been able to grow the NAV every year since IPO and the dividend on a consistent basis to provide total net positive NAV growth in every year. So I think that's very much part of our differentiator. And we've been very prudent in our debt management and our asset management approach. We have no drawings on our RCF. We have no commitments to buy. And we take comfort in our portfolio that the highly predictive nature of our cash flows means that we can pay a progressive dividend for the next 15 years without doing any further investments. Obviously, that's not the goal, but it gives us a lot of latitude to wait for the right opportunities to deploy capital. And I think it's a very different situation than many trusts out there.
Sure. And just sticking with the dividend, clearly that's going to be one kind of key component of BBGI's total return moving forward. Could you just talk us through in a bit more detail the dividend policy?
Yeah, so our dividend policy is very much to provide a progressive dividend and well covered. We've grown our dividend. We IPO'd in 2011, and we said we would keep the dividend flat for the first 2 years, but then we would grow it progressively. And we've been able to do that. We've grown it at an average of 3.6% since 2013. We've been recognized by the AIC as a next generation dividend hero for being able to increase the dividend over 10 years. Even during the height of COVID, when 400 plus listed companies on the LSE cut or suspended dividends, we were able to grow our dividends. So I think investors should take great comfort in that. And, not only have we increased the dividend at a pace greater than inflation, but we've also increased the NAV over that same period of time. So the total NAV return has been very positive. It's been 8.5% since IPO. And as I say, we like to say that we can continue to pay a progressive dividend for the next 15 years without any further investment, just on the certainty of the cash flows coming out of our existing portfolio. And then finally, when we benefited from inflation, we've grown the dividend. So in more recent times, we grew the dividend 6% in 2023. We're proposing to grow it again 6% in 2024, and then grow it thereafter on a progressive basis. So we really have passed through the benefits of inflation that's coming out of the portfolio to the investors.
Sure. And looking at it from the kind of end investor's perspective, what do you see as BBGI's role in a potential investor's portfolio?
I think the role I would see is it's a great exposure to have because of its defensive nature. People often talk of us as a bond proxy, but I think we're much more than that. We provide stable, predictable returns irrespective of the environment. We've been able to grow the dividend every year. We've been able to grow the NAV on a consistent basis. So we're doing it by generating cash flows from assets that serve local communities, schools, hospitals, roadways, et cetera, that are the fabric of the communities they serve. And so I think it's a great form of progressive cash flows, stable, predictable cash flows coming in for investors who want yield. But it's also at the current share price as of today, you can pick up the stock at a 6.6% dividend yield with inflation linkage. So someone who's looking for income and inflation linkage and a well-covered dividend, or dividend was 1.47 times covered at the most recent set of results. And, we've historically been in that 1.3 to 1.4 range. So someone who's looking for a stable, predictable return that they can sort of set in their portfolio and forget about, I think that's what we offer.
Sure. And there's a sense that some of the headwinds we've seen for the infrastructure sector in recent years are abating. One of those potentially interest rate rises, which we saw from 2021, which hit the sector. How much did it impact BBGI, and kind of what's the kind of outlook now rates are hopefully kind of reaching a peak and now coming down?
Yeah, so much like many of the investments in the alternative income space, BBGI is interest rate sensitive. But I think we've proven ourselves to be much less interest rate sensitive than many others, and probably much less interest rate sensitive than many expected. Part of that is we didn't have any excessive leverage at the corporate level. We had a very clean balance sheet. All of our projects are financed on a non-recourse basis with fully amortizing debt. 55 of our 56 assets have no refinancing obligations. So we weren't impacted by rising interest rates in terms of impacting our debt costs. And while rising interest rates impact valuation negatively, and so we suffered a little bit there, but we benefited because of the strong, usually when you have rising interest rates, you typically have higher inflation rates. And so the offsetting impact of inflation benefited us. And we also, because of the way we've structured the portfolio, a lot of these assets they're all financed on a non-recourse basis. So they have significant cash reserves. So when interest rates went up, we benefited from that. So because we have a lot of cash on deposits in major maintenance reserve accounts and debt service reserve accounts. So the outcome has been that we have probably been less sensitive to interest rate, changes than many would have thought. So what we're certainly less sensitive to interest rates than, say, a long duration bond. So if people are looking at it as a proxy, but second part of your question was, if we now find ourselves in a lower interest rate environment, how are we going to be impacted by that? I think we will benefit, but it's not driving our business model. Our business model isn't predicated on lower rates. The existing cash flows are contractual, inflation linked. If inflation's a little bit lower, then we may suffer, but we may pick it up on the valuation because the valuation offsets may be greater than the decline. So I think we're optimistic about the future, but not dependent on rates declines to drive our business.
Sure. And as headwinds abate, hopefully some of the kind of tailwinds will kind of come to the fore a bit more. How do you assess the outlook for the wider infrastructure sector and the kind of knock-on for BBGI itself?
Yeah, I mean, there's a lot of very positive trends in the broader infrastructure sector that we're going to be beneficiaries of. We talk about the Ds, and it's decarbonization. It's as the global shift away from carbon emissions becomes more focused, there's going to be opportunities there for us. There's the decaying nature of infrastructure. So a lot of the infrastructure that people use on a day-to-day basis is no longer fit for purpose and should be replaced. So we think there'll be a role for companies like BBGI to invest. Deficits is another D. A lot of all the countries we're in typically have large fiscal deficits coming out of COVID, and they don't have they see the benefits of investing in infrastructure, but they don't have the balance sheets to do it. So we see them leveraging private sector involvement to deliver infrastructure, and that's regardless of whether they're right of center or left of center governments. And then another D is as demographics. As people age, the importance of healthcare and primary care increases, and so infrastructure has to be developed there to deliver hospitals and facilities. So a lot of positive tailwinds for the global infrastructure outlook. But in our specific market, we're globally diversified. We're not dependent on any one market. We're a $1 billion sterling market cap, so we don't need to do tremendous amounts of investment. We scour the globe looking for opportunities, and we consider many more than we invest in. So we've got a very robust opportunity set to consider. And we're, as I say, we're in the enviable position that we can deliver our progressive dividend without any further investment. So we're really taking our time to make the right investments, and I think that gives us a great position of strength as we move forward.
We hope that gives you an insight into BBGI's investment strategy and a better understanding of the wider infrastructure sector. I'd encourage you, of course, to visit the BBGI website for more information and check out the latest research notes and results analysis on the KTI website. Duncan, thanks for joining me today.
Thanks, David. I really appreciate the opportunity to speak with you and your listeners. Thank you.
Past performance is not a reliable indicator of future results. The value of investments can fall as well as rise, and you may get back less than you invested when you decide to sell your investments. It is strongly recommended that if you are a private investor, independent financial advice should be taken before making any investment or financial decision. Please be aware that there can be a time lag when we release podcasts, meaning time-sensitive information may no longer be accurate at the time of publication. Kepler Partners LLP has a relationship with some of the companies covered in this podcast, which may impair its objectivity. Kepler Partners LLP is authorized and regulated by the Financial Conduct Authority.